Babe, what do you think of the Nividia earnings that just came out?
I'm just looking at it right now. Not the earnings, but the stock. Before anything, full disclosure, right? I'm not a financial advisor. I'm not going to give you any advice one way or the other. And I am long Nvidia. I own it. And what happened Wednesday was they did their big earnings report. The whole market, like it was as important as interest rates last week. Like the whole freaking markets were looking at its earnings. First and foremost, the stock's down at least 8-9% since the earnings came out, right? So obviously it's not one of those prior 3 quarters of Nvidia blowing up after earnings, right? But what's interesting, and I'll explain why, is that it had blowout earnings, like 120% beat on revenues, 150% beat on earnings per share. The Blackwell issue, there's this issue that they have for people who don't know. Their new Blackwell chips were delayed for a design flaw, and everyone was freaking out that that's going to drive things down. But it didn't really, Jensen didn't say that it was, the bottom line is it didn't really affect it negatively. It was technically like a blip. I'm summarizing basically. The concern was their gross margins was a little off. But the big picture is this. Okay, why didn't it explode even though it had good earnings? The rate of it beating expectations has gone it started like this, and then like this, like this, like this, like this. So it's what a lot of people say is normalizing. A lot of analysts even say, buy the dip, because it's still a good company, but it's not going to knock it out of the park every single quarter. It can't, because you're going to reach a saturation. It's going to start saturating. It's going to start normalizing. Companies don't grow established companies don't just explode like this every quarter.
Right.
So even though they beat in a really good way, if you look at their earnings report and how they're growing quarter over quarter, it's a great report. But the expectation was ridiculous. It was sky high expectations, and it just didn't get there. Logically, how could it? How could you grow like that consistently? Eventually, it's going to taper off, right? You're selling all this product, the market's using it, and that's why the market didn't think it was good enough, and that's why it's down like 8%. Even it's putting along around $119, $120 right now. I still like the company. I still have it in a lot of my portfolios because I think long-term wise, I hate to quote it, but like Jim Cramer says, own it, don't trade it. It's a good company.
Yeah.
But that's kind of my take on it.
Cool. And then Moby has some more information on the earnings report. If anyone wants to get their free newsletter, you can click our link in bio.